Digital financial tools, apps, and systems for success. Money management has changed dramatically over the last decade. Earlier, people had to maintain notebooks, visit book banks, and manually calculate expenses to understand where their money was going. Today, digital financial tools have made managing money easier, faster, and more accurate than ever before. Whether you are a student managing a monthly allowance or working professional planning investments, a family handling household expenses, or a business owner tracking cash flow, technology offers practical solutions for everyone. In this video, we will explore the most useful digital financial tools, understand how they simplify everyday money management, and learn how their right systems can help build better financial habits. Each concept builds on the previous one, showing how technology can transform financial decisions from reactive to proactive. Let's begin. Point number one, understanding digital financial tools. Digital financial tools are software, mobile applications, and online platforms that help individuals and business manage money efficiently. Instead of relying on manual calculations or paper records, these tools automatically organize financial information into meaningful insights. They help users track income, monitor expenses, set saving goals, manage investments, pay bills, and even plan for retirement. Technology has transformed financial management from something that required accounting knowledge into something almost anyone can do. Many tools use automation, or AI, and cloud storage to keep financial records updated in real time. This means users always have an accurate picture of their financial health without spending hours organizing receipts or spreadsheets. Digital tools also reduce human errors. Manual calculations often lead to mistakes, forgotten expenses, or inaccurate budgeting. Automated system records transaction instantly, categorize spending, and generate reports that help users understand where their money is going. Another important benefit is accessibility. Most financial apps can be accessed anytime through smartphones, tablets, or computers. This allows users to make informed decisions wherever they are. The increasing popularity of cashless payments and online banking has made digital financial tools essential rather than optional. Individuals who embrace these technologies often make better financial decisions because they have more accurate information available at the right time. Example for this point, Sarah, a university student, used to record expenses in a notebook. She frequently forgot small purchases like coffee or transportation. After switching to a budgeting app, every transaction was automatically categorized, helping her save over $80 every month simply by recognizing unnecessary spending. Next, point number two, budgeting apps. Building financial discipline. A budget is the foundation of financial success, and budgeting apps make process much easier than traditional methods. These applications automatically organize income and expenses into categories such as housing, food, transportation, entertainment, healthcare, and savings. Instead of guessing how much money remains, users receive real-time updates showing current spending patterns. Many budgeting apps allow also use users to create monthly spending limits. When spending approaches the limit, the app sends a reminder encouraging smarter financial decisions before overspending occurs. Modern budgeting tools often include visual charts, spending trends, and monthly comparisons. These insights help users understand how habits change over time and identify areas where cost can be reduced. Budgeting apps also encourage accountability. Seeing daily expenses visually makes users more conscious about unnecessary purchases. Small daily expenses become more noticeable when they appear together in monthly reports. Many apps also allow shared family budgets, making household financial planning more transparent. Couples or family members can coordinate expenses and savings goals without confusion. Ultimately, budgeting apps transform budgeting from a difficult monthly task into a continuous financial habit supported by automation and timely reminders. Let's say example, David set a monthly dining budget of $250 using a budgeting app. Midway through the month, the app alerted him that he had already spent $190. He reduced restaurant visits and finished the month within budget while saving $60. Next to point number three, expense tracking systems, knowing where money goes. Many people believe they know how they spend money, but detailed expense tracking often reveals surprising patterns. Expenses tracking systems automatically record transactions and classify them into spending categories, giving users a clear financial picture. These systems eliminate the need to collect receipts manually. Every purchase becomes a part of a complete spending history, allowing users to identify recurring costs, subscription services, seasonal spending, and unnecessary purchases. Expenses tracking also improves financial awareness. People often underestimate how much they spend on small daily purchases because Individual transactions seem insignificant. However, when combined over weeks or months, these expenses become substantial. Many tracking systems generate weekly or monthly reports that compare current spending with previous periods. This helps users identify positive improvements or recognize unhealthy financial trends before they become serious problems. Business also benefit greatly from expense tracking by monitoring operational cost, travel expenses, employee reimbursement, and vendor payments. Accurate expense records improve tax preparation and financial planning. The greatest value of expense tracking lies in visibility. Financial decisions improve dramatically when spending becomes measurable rather than based on assumptions. Example: Maria believed she spent around $100 monthly on online subscriptions. After reviewing her expense tracker, she discovered multiple forgotten subscriptions, totally $185. Canceling unused services immediately reduced her monthly expenses. Next to point number 4, digital banking and online money management. Digital banking has transformed how people interact with the financial institutions. Customers no longer need to visit physical branches for routine banking activities. Mobile banking apps allows users to check balances, transfer money, pay bills, deposit checks, monitor transactions, and manage accounts from anywhere. Real-time transaction notification improves security by immediately informing users whenever money enters or leaves their accounts. Quick alerts help detect unauthorized transactions before larger financial losses occur. Digital banking also simplifies bill payments through scheduled automatic payments. This reduces late payment penalties and improves credit history by ensuring bills are paid on time. Many banking apps provide spending analysis, helping customers understand financial habits without requiring separate budgeting software. Online banking also has increased convenience internationally. People can transfer funds, manage multiple accounts, and monitor investments from a single platform. Strong security measures such as biometric authentication, encryption, and two-factor verification help protect the customer information while maintaining easy access. Digital banking demonstrates how convenience and financial control can work together effectively. Example: John scheduled automatic payments for his rent, electricity, and internet bills through his banking app. He never missed another due date and avoided multiple late payment fees throughout the year. Next to point number 5, saving and goal-based financial apps. Saving money becomes easier when financial goals are clearly defined. Goal-based savings apps allow users to create a separate savings target for emergencies, vacations, education, home purchases, or retirement. Instead of placing all savings into one account, users divide money according to specific objectives. Watching progress toward each goal provides motivation and encourages consistent saving behavior. Many apps automatically transfer small amounts into savings whenever income is received or purchases are made. Some around purchases to the nearest dollar and save the difference automatically. Visual progress bars make saving more engaging rather than feeling like a sacrifice. User experience satisfaction as goals gradually approach completion. Emergency savings remain especially important because unexpected expenses are inevitable. Goal based tools encourage financial preparedness before emergencies occur. These systems demonstrate how automation helps transform occasional saving into a consistent long term habit. Let's say example: Emma created a vacation savings goal of $2,400. Her savings app automatically transferred $50 every week. Within a year, she reached her target without making large one time deposits. Next, my number 6, investment platforms and wealth building tools. Investing has become far more accessible thanks to digital investment platforms. Previously, investing often required significant knowledge, large amounts of capital, and professional advisors. Today, many platforms provide educational resources, research tools, diversified portfolios, and automated investing options. Digital investment platforms help users compare investment opportunities, monitor portfolio performance, understand the market trends, and evaluate long-term financial growth. Educational content within these platforms helps a beginners understand concepts like diversification, risk management, compound growth, and asset allocation. Many systems allow investors to start with their relatively small contributions, making investing accessible to younger generations and first-time investors. Regular portfolio monitoring also helps investors remain focused on long-term objectives rather than reacting emotionally to short-term market fluctuations. Successful investing depends on discipline, education, and consistency rather than predicting daily market movements. Example: Alex invested $200 every month using an automated investment platform. Over several years, consistent investing helped build a diversified portfolio while reducing emotional decision making. Next, point number 7, payment apps and digital wallets. Digital wallets and payment apps have simplified everyday transaction by allowing secure electronic payments without carrying physical cash. Users can pay bills, transfer money, shop online, and complete purchases within seconds. Digital payment systems reduce the need for handling cash while maintaining detailed transaction histories. Every payment becomes automatically recorded, making budgeting and expense tracking much easier. Many payment apps support contactless technology, allowing quick payments through smartphones or wearable devices. This improves convenience while reducing checkout times. Security features such as encryption, biometric authentication, and tokenization protect sensitive payment information during transactions. Digital wallets also simplify international payments and online shopping by securely storing payment information across multiple merchants. The combination of convenience, speed, and security has made digital payment systems a standard part of modern financial life. Let's say example, during a family vacation, Lisa used the digital wallet to pay for transportation, meals, and attractions. Every payment appeared instantly in her transaction history, making it easy to review vacation spending afterward. Next, point number 8, financial automation. Let technology work for you. One of the greatest advantages of digital finance is automation. Instead of relying on memory, automated systems perform routine financial tasks consistently and accurately. Automation includes scheduled bill payments, recurring savings transfers, investment contributions, loan payments, subscription management, and financial reminders. Removing manual effort reduces missed deadlines, forgotten payments, and inconsistent saving habits. Automation creates discipline without requiring constant attention. Financial automation also reduces emotional decision making. Savings and investments happen automatically before discretionary spending begins. Businesses use automation to process payroll, generate invoices, monitor expenses, and reconcile financial records efficiently. When repetitive financial tasks become automated, individuals gain more time to focus on higher value financial decisions such as career growth, investing, and long term planning. Example, Kevin automated monthly transfers of $300 into his emergency fund immediately after payday. Because the transfers occurred automatically, he built a significant savings without depending on willpower. Next, point number 9, protecting financial information online. As financial technology grows, cybersecurity becomes increasingly important. Digital financial tools contain sensitive personal and financial information that must be protected from fraud and cybercrime. Users should create strong, unique passwords, enable two-factor authentication, update software regularly, and avoid sharing confidential information through suspicious messages or unsecured websites. Public Wi-Fi networks should be avoided when accessing bank or investment accounts because unsecured connections increase security risk. Regularly reviewing account activity helps identify unusual transactions quickly. Immediate reporting reduces potential financial losses. Learning to recognize phishing emails, fake websites, or fraudulent phone calls is an essential financial skill in today's digital environment. Technology provides excellent financial convenience, but responsible digital behavior remains equally important for long-term financial safety. Example, for this point, Mikey received an email requesting his banking password. Instead of responding, he contacted his bank directly and discovered the message was phishing attempt, protecting his account from fraud. Next, point number 10, building a complete personal financial system. Individual financial tools become much more powerful when combined into a complete financial system rather than using isolated apps. Successful individuals integrate budgeting, expenses tracking, and individual banking, savings automation, investments, payment systems, and security practices into one organized workflow. A complete financial system provides a continuous awareness of income, expenses, savings, investments, and financial goals. Information flows automatically between different tools, reducing manual work and improving decision making. Consistency is more important than complexity. Even simple financial systems can produce excellent results when used regularly over many years. Financial success rarely comes from one perfect decision. Instead, it results from thousands of small, consistent actions supported by reliable systems and technology. The right digital tools remove unnecessary friction, allowing users to focus on building wealth rather than managing paperwork. Ultimately, technology becomes a financial partner that supports better habits, stronger discipline, and a greater confidence throughout every stage of life. Let's say example, Jennifer combined a budgeting app, digital bank, automated savings account, investment platform, and expense tracker into one routine. Within 2 years, she improved her financial stability, eliminated unnecessary spending, and consistently worked toward her long-term financial goal. Finally, digital financial tools have revolutionized the way people manage money. From budgeting apps and expense trackers to digital banking, automated savings, investment platforms, and secure payment systems, Technology makes financial management simpler, smarter, and more efficient. However, the tools themselves do not create financial success. Consistent habits too. When the right technology is combined with informed decisions, discipline, and long term planning, anyone can gain greater control over their finances and reduce financial stress. Start with one tool, build one habit at a time, and gradually create a complete financial system that supports your goals. Small investments made consistently can lead to lasting financial success. Thank you for watching, and we will see you in the next video.